Welcome back to another trade recap. Today is February the 6th. I personally did not take any trades today. I sat on my hands, but it is the end of week. So we're going to go over a full weekly recap on exactly the trades that I ended up taking, the thought process coming into this week. And of course, we're going to talk about a lesson that I think is very important. I touched up on it on the weekend, which is accepting risk. I want to dive a little bit deeper into why that played a huge factor this week, how I actually messed up on Wednesday, which could have been my biggest trade of the month by far, but I didn't accept the risk. I didn't let the probabilities play out. I managed my position a little bit poorly and I paid the price. But that's exactly what I want to talk about. Let's go on to the statistics first, and then we'll head on to some of the trades that I'm taking. So as you can see right here, these are my trading statistics for the month of February. $55,000, 83% win rate, profit factor is super high. I've only took one losing trade. So 5 winners, 1 loser, 100% daily win percentage, average win to loss ratio of 3.43. So as you can see, these are my trading statistics for the month so far of February. No complaints whatsoever. Absolutely fantastic week in the markets. I think we traded very well this week. The only hiccup that I had personally was on Wednesday. As I mentioned, I didn't accept the risk. This was actually the best day towards the downside on a few tech names. And then, of course, today, didn't find any trades that I like personally within the first 15 to 30 minutes. There's a couple of aggressive entries, but I didn't want to be too aggressive coming into market open. We are having a super nice bounce in the markets here now, but wasn't able to capitalize that. If you're trading next week's contracts, right, Monday's contracts now, if you're not trading, right, of course, 0 days, you'll be able to capture these higher time frame moves. But of course, if you're trading Fridays, it is going to be a little bit more difficult. But let's kind of talk about the main lesson that I have for today, which is accepting risk. And I think this is a very good example. We talked about this on the weekend, which was accepting risk, right? That blackjack analogy I talked about, which was what is the main difference between, right, blackjack and, right, trading? The main thing is accepting the risk, right? Once you have, let's say, for example, a blackjack hand, and you go to the casino, as soon as you put down the money, once the cards flip, sorry, right? Let's say you put $1,000. Once the cards flip, right? The only scenario that you have is a win. Sorry, my face cam is blocking this, or a loss. Once this happens, right, you cannot take your money back, right? Once the cards flip, right? Because the game's already started. You can't take your money back as soon as you see the odds. But in trading, right, once you, for example, you also are risking $1,000. Let's say, for example, in this case, the trade starts working in your favor. And now you take profit, right? You hit TP1. Now, what are you going to do? You're already in profit. You hit TP1. Are you going to move your stop loss to break even? Are you going to, right, take majority off at TP1? Are you going to move your stop loss to break even? Are you going to maintain your original stop loss, right? What are you going to do and what is your trading plan? And that's what I kind of want to talk about. A great example of this is on Nvidia. This is the trade we ended up taking here on Wednesday. We ended up taking 2 trades. Actually, I personally took 2 trades, 2 different strike prices. Sorry, same strike price, 2 different expirations. This was one of the trades I ended up taking. $11,000 adjusted cost, 110 contracts, risking about $3,000 on this one. 5-minute opening range break plus your 1-minute order block. These are my executions. So as you can see for Nvidia, right here, what we have is weakness underneath our previous day lows. As you can see, price underneath our previous day lows, nice push towards the downside. Right off the bat, we come down in towards our after hours lows. And what are we looking for here on Nvidia? We're looking for the reaction that we have off our 5-minute opening range plus our 1-minute order block. So once price hits our key level, which is low of day, plus our first take profit, what are we going to do? So we enter in here on Nvidia, and as you can see, nice push towards the downside. Now, are we going to move our stop loss to break even? Are we going to move our underline to break even? Are we going to move our option contracts to break even? What are we going to do? And as you can see, price comes back up, maintains underneath our original stop loss, and then we end up continuing towards the downside. But how are we supposed to manage our position? What is the correct way? The thing about trading is that there is actually no correct way to manage your position, right? Everyone's a little bit different. Let's say you take first take profit, you move your stop loss to break even, right? You technically followed your plan, but as you can see, the charts were still maintaining market structure and still continue towards the downside. So, what is my personal preference on how I like to manage trades? I am going to manage the trade as long as price is holding a technical level. So in this case, as you can see, price is continuing to push lower, hit our first take profit. I'm going to maintain this original stop, which is our 5-minute range high plus our 1-minute order block. Until we can break back above our 184, we're going to maintain a bullish stance here in the market. As you can see, we had that perfect rejection. I know some people might have bought here, sold some here. You're going to sell here just because what? You're looking at your P&L. There's no reason to do that. As long as price is maintaining structure, accept the risk, accept that the probabilities are going to play out. You can see Nvidia end up pushing nicely towards the downside, right in towards our higher time frame key levels. So this was a great example of, right, accepting the risk and letting the probabilities play out, right? And this is something you have to learn as a trader. It's a little bit harder to accept risk, especially if you're looking at your P&L. Maybe you're trading 0-day contracts. And as you can see on the next day, I actually did the exact same thing, right? I had a super solid entry. I ended up scaling down nicely and I ended up managing my position very nice. But the trailers, I ended up cutting in the exact spot it rejected off of, right? I didn't accept the risk because I didn't want to give some profits back when I was trading those 0-day contracts. So in this day, this was the Tesla trade that we took on Wednesday. Ended up taking 80 contracts, trade risk amount 4,600, realize our multiple 1.65. The trailers in this case, as you can see, if I let them play out, it would have been an absolutely fantastic day in the markets. But as you can see here for Tesla, right, we end up having this nice rejection. We get underneath our 5-minute range low. And now we're looking for this continued push towards the downside underneath our 5-minute range low plus our up close candle here as well. So we're in this Tesla trade. Price is now continuing towards the downside. We hit one of our main levels, which of course is our previous day lows. And as you can see, I scaled some nicely and now I have a remaining trailer position. Once I see this huge candle right here on Tesla, what is my initial reaction? My initial reaction when I'm trading 0-day contracts, I'm like, damn, this is a pretty big candle. Right now, for Tesla, it's breaking back above our previous day highs. We do have room back up and towards our 116, but at the exact same time here, Qs was kind of flipping here as well. And I ultimately cut my position as price is coming back towards the exact level that it has to hold because I was looking at my P&L, right? I didn't want to give too much profits back. Right now, I'm giving back about a few $1,000s here. I think the market is overall going to reverse just because I'm looking at the QQQ. I'm zoomed in on the 1-minute time frame, but I'm not zooming out on the higher time frames, which was key, right? I had a whole thesis on Tesla laid out on this day. If price can break underneath, we can see continuation towards the downside, right? After I stopped out on this position, I could have even looked for potential re-entry just because that higher time frame thesis was very much still intact, right? This is a key level that we have marked out. Once price broke underneath, back underneath this 415, this could have been the exact area where I could have looked for another potential trading opportunity for continuation. But ultimately, right, I had a super solid entry on the 0-day contracts. I ended up stopping out of my trailer positions and price ended up continuing towards the downside. So there was a couple of mistakes that I've made specifically this week. This was the biggest mistake was on Wednesday, and it was essentially just not accepting risk. And a lot of the trades, especially this week, right, they had a clear higher time frame objectives, right, either towards the downside on Tesla earlier into the week. We had Nvidia, AMD, right, clear higher time frame objectives towards the downside. You just had to be a little bit more patient and had to give, right, price a little bit more room. If the higher time frames is intact, right, you want to trust your setup and let the trade play out. As you can see here for Tesla now, similar kind of thesis. It's a lot harder, of course, if you're trading 0-day contracts, but you have to trust the chart. The chart is what matters, right? Your P&L, right? That does not matter. That does not affect the chart whatsoever. Accepting risk and doing what the chart tells you to do is, of course, what's key here. I had a really solid lesson last week. I kind of touched up on this, of course, on the weekend. It was my last weekly recap. As for this week, we'll kind of touch up on some more things coming into next week as well in the weekly outlook. But yeah, pretty short kind of recap today. I personally didn't take any trades, so I just want to come on, make a video for you guys regardless, just kind of recapping some of my statistics for this week. But yeah, besides that, hopefully you guys enjoyed this. Yeah, with that being said, hope you guys have a great rest of the day. I'll have this upload for you guys. I'll have a weekly outlook uploaded for you guys tomorrow. I'll have a YouTube video on Sunday. And besides that, I'll see you guys all next week. Take care, everyone. Peace.